Ladies and gentlemen, welcome back to Walk the Block, where we are navigating digital finance together. I am your host for the evening, Zenith, and I'm joined by my excellent partner in crime, Mr. Agent J. How you doing, buddy?
I am doing excellent, sir. Started a few new projects today, so Monday started off really well. Bit boring in the markets, but I think everybody could use a little bit of a break from all the whiplash that they've been experiencing over the past few weeks. Trump apparently had a meeting today, but as far as the tariffs and the crypto stuff is concerned, nothing really substantive came out of it, which is why I think the market stayed relatively calm. But it is only Monday, and there's a lot more the rest of the week to come. So I think strap in for sure. How are you, buddy?
Boy. I am doing very well. Good start to the week. Excellent weekend. Had some friends from out of town stop by on a bit of a road trip. So we had a fun Sunday night, but I also kept it tame enough to, be up and at 'em by 0800 this morning for the day job. But that's neither here nor there. Outside of that, though, I think you're entirely correct. It's a bit of a boring news day, especially considering everything that's been going on the last 3 weeks. But I think it's a very much needed breather before we get back into the thick of things. Volatility is still a little bit high in the traditional market space, but it is notably down from last week, which I'm sure a lot of people are very happy about because, again, just a day of a breather. It definitely helps out a good bit. Outside of that, though, before we get into it, I do have something for the good folks at home. I do just want to remind everyone out there to head on over to Twitter. Give us a follow over there. That's where you get the most up-to-date information from us for everything regarding the show. And then outside of that, head over to our website. Both of the links are down in the description down below. And this is where you can find the latest and greatest for everything going on with our team, everything we're going to be releasing, and where you can get the best news. So with that being said, our first article of the evening, coming from the SEC itself, we have a statement on the confirmation of Paul Atkins. Short and sweet here. We welcome Paul Atkins as the next chairman of the SEC, a veteran of the commission. We look forward to him joining us along with our dedicated staff to fulfill our mission on behalf of the investing public. So, for those who don't know, Paul Atkins is a former SEC chair, not the head chair, but a former SEC chair back between 2002 and 2008. And he even had a longer SEC run back in the late 90s where he was not a chair, but he was working with the SEC to accomplish all sorts of business over there. Coming to us from ProScour, bit longer of an article talking about what we can expect, but we have the SEC under Paul Atkins, what to expect for registered and private offerings, climate-related disclosures, consolidated audit trail, digital assets, and agency reorganization. Sounds like they're going to be making some big changes over there, but real quick, I will read this. Paul Atkins, who was then nominated by President Trump to serve as chairperson of the Securities and Exchange Commission last week, completed a short confirmation hearing before the U.S. Senate Banking Committee. Despite its brevity, the hearing provided meaningful clues to Mr. Atkins' plans if he is confirmed by the Senate to lead the SEC, which appears to be reasonably assured to occur on April 3rd. On April 3rd, the Senate Banking Committee approved the nomination. Paul Atkins previously served as the staff of the SEC chairman Richard Breeden as an SEC commissioner from 2002 to 2008, as a member of the Congressional Oversight Panel for the Troubled Asset Relief Program, or TARP, following the 2008 financial crisis. Most recently, he founded and ran a regulatory and compliance consulting company and has also taken a bit of a side quest, taking a trip through all of DeFi, crypto, and learning the good news about all that stuff. He supports regulation, but clear, more tailored, and less political. Mr. Atkins can expected to avoid regulation that he perceives as an unnecessary burdensome on business, but indicated that we would back regulation that he believes appropriately balances effectiveness and cost. If we jump a little bit further down, we get to the section that we care most about. He says that digital assets will be a top priority. It comes as no surprise that Mr. Atkins believes that crypto and other digital assets have been hindered by regulatory uncertainty, and he intends to provide a firm regulatory foundation for offering and trading of digital assets through a rational, coherent, and principled approach. In other words, he believes that these activities should be regulated, but plans to provide clear and practical regulatory processes.
Yeah.
The SEC recently established a crypto task force, which has scheduled roundtable discussions. Proposed legislation has been talked about by the website on other avenues as well. Jay, what do we think?
I love everything about this. Obviously, a lot of it is lip service. So, what he's going to do for the crypto industry is yet to be determined. But at the very minimum, I do like the language that he used, and because they're very specific. Number one, such in stark contrast to how the prior boss man handled his job. So, in that article that you shared with us, he used the language of clear, tailored, less political, and I like all of those things. In particular, being less political is always a good thing because crypto should be a bipartisan issue. I think Congress is probably the one doing the very best job of being bipartisan when it comes to crypto. It's very rare for something like that to occur in government, which is inherently partisan by nature. So I really like that his goal is to provide clear and tailored regulation. Clear because a lot of businesses, especially now, since it's not just the SEC, but obviously Donald Trump, Congress, and the Senate are very open to digital assets. So I'm very hopeful that a lot of the businesses that have left and the ones who were considering leaving the United States are now going to reconsider for the latter, and then for the former, for the folks that already left, maybe we can somehow invite them back in and entice them, right? Incentivize them to do business here in the United States. One with a more friendly SEC chair. And obviously, Donald Trump has done quite a bit to set the groundwork for businesses coming back here to the United States, right? The tax incentives that he's providing comes to mind. Obviously, the strategic Bitcoin reserve also comes to mind for the Bitcoin maxis. But clear regulation for those businesses would be very good because one of the main reasons why a lot of those folks left is they saw how the people who decided to stay were being handled. A lot of the folks, and go over it. We've gone over some of those egregious acts by the SEC that was chaired by Gary Gensler, where Robinhood in particular comes to mind. Coinbase is another big entity that comes to mind. I've heard the CEOs from both of those companies. They have spoken several times when asked on interviews. And the question was, what was your experience when approaching Chair Gensler when it came to registering your business for X, Y, and Z? And a very, very common answer between those two, and I'm sure other people have had very similar experiences, that we were stonewalled along the way. And it is in stark contrast to the messaging that Chair Gensler would give whenever he would speak or whenever he would appear in front of Congress. He would always say that, one, that the regulations we have in place for crypto are enough, which is obviously not the case. And number two, that he would say that none of these entities wanted to come and play ball or register, which is obviously just a blatant lie, right? I don't know if somebody was putting the wool over his eyes, but obviously that was a blatant lie. So clear is definitely very good because then you give those businesses a lot of peace that if they plant their flag here in the United States, that our lawmakers are not going to come after them unfairly. And then tailored is also very good because digital assets have to fall within a very specific set of rules and guidelines and regulations. They have to have their own very specific guardrails around them because they're not the exact same thing. They might have some similarities with other commodities and other securities, but it's not an apples to apples comparison. And so creating something that's tailored for the industry will one, increase the incentivization, but it will also allow them, it would also not restrict them by throwing them underneath the umbrella of all other types of securities or commodities. Right? I don't think that's the way that you should treat any asset. And it's not just crypto, right? Because America's supposed to be the place we're supposed to be the pioneers. All right, it's supposed to be the place where innovation goes. There's a reason why an overwhelming majority of the technology innovation, the medical innovation, they come from here because we're supposed to be the country for innovation, and crypto should be no exception. And so, it, just as a patriot, it really rubbed me the wrong way, the way that the SEC and the prior administration were treating digital assets, because it was so antithetical to the spirit of the United States, where people are supposed to come here because this is the place to innovate, because you have the freedom to do so. So I know that was a very long-winded answer, but I think I was able to condense my thoughts fairly well there. So
Oh, that was very well said. And you had a lot of great points there too. I completely agree on basically everything. I think that Paul Atkins coming in as the chair of the SEC is going to be a good thing, and hopefully he can help undo some of the Gary Gensler PTSD that we have from the previous run there at the SEC. I think that, like you said, having a tailored approach, and specifically, the U.S. is supposed to be innovating on a lot of things, not just because it's the mantra of, oh, we're supposed to. It's no, the structure, the base, the history. It's the perfect on ramp for that kind of innovation, which is that we have the best and brightest, we have the biggest support structure overall, and the capital markets pretty much live inside the United States. So this is all what should drive that innovation. And what happened with Gary Gensler was that he kind of just ignored that entirely and just tried shoehorning all of crypto into existing securities laws, whether it technically met it or did not. And frankly, they acted like they kind of just didn't care. As we saw with many of the rulings coming out over the last 4 years, talking about how you can't just shoehorn this stuff into the existing securities laws, because technically, by definition, it does not meet existing securities laws. So this is what you alluded to earlier, where you get those clips of like Coinbase and Robinhood CEOs being like, we are trying to adhere to your system, despite all the choke point 2.0 stuff, trying to slow us down and muddy the waters and just bog us down with unnecessary paperwork. And then you get Gary Gensler coming out on like Fox Business or Squawk Box saying, oh, we have all these regulations existing, they just don't want to comply. It's like, no. They're trying to comply. You're just making them go through unnecessary process to treat them very unfairly as well. And treating people unfairly, again, what you said is that they've scared away a lot of potential investors with everything that happened over the last few years as well. Because if you're not going to get treated fairly with U.S. securities laws, go somewhere else. Go where you're going to get treated fairly. And that's what we saw.
Exactly. Like, how can you be, even if you wanted to play ball, how could you be confident that the person you're doing business with is a good faith actor when they haven't conducted themselves in that exact same way? Which is why I think people just packed up their bags and left. Remember just how short of a stick Kraken got? Because you're probably going to be a lot more familiar with this than I am, or some of the folks in our audience. And that is, whenever a business entity comes across the great wall that is the U.S. federal government, and a lawsuit is slapped on them, they usually, correct me if I'm wrong, but the course of action is usually, hey man, can we just settle out of court and we'll pay a fine and we'll just conduct our business as usual, but now within the guidelines that you tell us. Am I correct in assuming that?
That is one strategy for sure. In the case of like Kraken and stuff, bringing your business across and then immediately getting hit with lawsuits, it's kind of like, what the heck, man? Like, really? This is the immediate course of action? But then there's also this, you can call it tinfoil hat theory, but it was very odd that a lot of crypto firms actually settled for the exact amount of about $22 million with the SEC last time.
I didn't know that.
And yeah, it was odd that it kept coming up over and over again. I can think of at least 4 cases where that number appeared. But it's just odd. And when you have stuff like that going on, it just kind of feels like racketeering almost, or just kind of like extortion money, where it's like, oh, you're operating on my turf, you better pay me some money. Even though that's not what the function of the SEC is supposed to do. They really, really ran hard with the enforcement aspect of their job in the last 4 years. And I think, as we saw coming out from the article and what we've seen from Paul Atkins so far, a reorganization and a realignment of the SEC itself is in good order and is very welcome at this point, because they should be providing good regulatory guidance and clear regulation about what's going on. Even the banking industry got mad at them over the last 2-3 years there with some of the stuff they were doing. And it got to the point where it actually became a bipartisan issue every time Gary Gensler got up in front of Congress and had those terrible C-SPAN moments. It's one of those situations where like he was running the agency in a way that is so against everything else, against the traditional norms of how it's been run previously, that he's ruffling a lot of feathers and kind of was like, it's the idea of moving fast and breaking things, but doing it in the wrong way.
In the worst way
Because
possible.
yeah,
He
exactly.
was the opposite of what CZ was doing.
Exactly. But
Yeah.
as far as stuff coming down the pike, I mean, we got a lot of good. You had the correct word at the beginning there, which was lip service. As of right now, a lot of it is lip service. Aside from the executive orders and the task force that are being stood up in the beginning of the year, January, February timeframe, if I'm remembering correctly, that stuff is actual on the books. We have an article later on talking about Tim Scott is talking about how the Genius Act is actually pretty much ready to go for August when they're coming back for session and when they believe they have all the necessary votes to pass that stuff and carry it through. But until we actually see more concrete things on the ground happening, a lot of it is just lip service, like you said. Granted, it's very flowery and nice lip service, considering we've gotten 4 years of being told that we're scammers, fraudsters, and hucksters by Gary Gensler. So it's a very warm welcome. But until we actually start to see some results, it's going to be a bit of a waiting game, in my opinion.
Yeah, man. I'm certainly hopeful for it, but I'm with you. I'm not going to plan around or wish or hope that this thing is going to happen until it actually does. Once it's on Donald Trump's desk and he puts pen to paper and he puts his Jan Hancock there, and then it's one and done, and then we can forget about it, right? But I think I think everybody's optimistic. The reason why I brought up Kraken was they got really the short end of the stick, where a lot of the times they wanted to play ball with the SEC, they pay out of court, and then a few months later they get hit with another lawsuit. And this happened, I think, 2 or 3 times to them, where they tried settling out of court, they paid their fines, and then they got hit with another lawsuit. So how can you expect industry to stay in your country when you're treating them in that manner? Like, people are want to play ball with you, but you treat them poorly. And so, of course, I'm surprised Kraken wasn't one of the first people to leave, to be quite honest. I'm very much surprised, like, because of the way that they were treated, that they stayed for as long as they did. But kudos to them, because now that guy is out, and it seems like we have a better environment here in the US for digital assets as a whole, right? Not just crypto, because I think people tend to forget that digital assets encompasses more than just crypto.
And it does. They're trying to get that whole real world asset thing in there too. So
shout out Manta.
I haven't checked how much they recovered, but yeah, they had a 90% drop yesterday. So hopefully not too many people are disaffected by that. But I do have a clip I want to bring onto the stage here. Please let me know if you can hear it. This is from Senate Banking Chair Tim Scott talking about upcoming crypto bills. No dice, eh?
So when you share screen, Z, it should give you the ability to also share audio. I think you just have to toggle the box on. Yeah. You see how when you press the share screen button at the very bottom left, it says also share tab audio. I don't know if you see that on your end. Yeah, when you click present and then you click
I'm trying to go through
screen.
Telegram on that one, so it doesn't like it. That's fine. I'll just bring up the article instead.
You can also pull it up on YouTube. I'm sure YouTube has it.
Already coming to us from Cointelegraph, Senator Tim Scott is confident market structure will be passed by August. Tim Scott emphasized that the committee has already advanced several crypto regulatory goals. The chair of the Banking, Housing, and Urban Affairs said recently he expects crypto market bill to be passed into law by August 2025. The chairman also noted the Senate Banking's advancement of the Genius Act, a comprehensive stablecoin regulatory bill, in March, as evidence that the committee prioritizes crypto policy. In a statement to Fox News, Scott said, quote, "We must innovate before we regulate. Allowing innovation in the digital asset space to happen here at home is critical to American economic dominance across the globe." There you go. That's the video I wanted, but instead we just get a screen cap. So what do you think about that? Promises for August? Is this promises made, not promises kept yet? How are you feeling about this one?
I think so out of all of the current bills that have been passed that are very crypto specific, I think this one has the highest likelihood of actually getting it through, because it's already gone through the Senate. And I think that's what that is the hardest point of entry for crypto right now. even though we do have majority control of the Senate, at least in Biden's administration, it, we always had the most difficult time getting things through the Senate when it came to crypto. They weren't as pro crypto as the Congress was, right? It wasn't as bipartisan in Congress, in the Senate, as it was in the Congress. And so the fact that we've already gotten this bill through the Senate and now it's now being reintroduced, being introduced through Congress, is a very good sign. Is a very good sign, because if it's already gone through the Senate and it's just waiting for Congress approval, well, we know that Congress is way more bipartisan when it comes to crypto, and so the probabilities of the genius bill going through Congress and then finally making it to Donald Trump's desk, well, I'm very hopeful for that. Same thing with Cynthia Lummis's bill, right? Because that one's already passed through the Senate and it's being reintroduced into the Congress, and so I'm also very, very hopeful for that. So in terms of this thing actually happening, I think it actually has a very good chance of coming through, especially if their deadline is by August, right? So probably sometime in August, early September, maybe October at the latest is probably when we're gonna get this thing through. It is my personal opinion. I've shared this multiple times that I think that crypto adoption is going to come. So the point of entry for a lot of people is going to be through stable coins. It is my personal opinion that even though, so I want to get your thoughts on what Jack Dorsey says about Bitcoin. He says that if Bitcoin fails to become a peer-to-peer currency of exchange between people, and that it has failed. I don't agree with that. And I don't agree with the fact that you should be giving your Bitcoin away. I think if it was like, for example, if you or me were making a transaction, like I'm like, cool. Like Z appreciates what Bitcoin is. I don't mind giving him some Bitcoin to pay for a product or a service, right? But I'm not going to give the U.S. government my Bitcoin. I'm not going to pay for my coffee in Bitcoin. I'm just not going to do it. I'm not going to give you my Bitcoin. Bitcoin is meant to be stored just like gold, right? And let it appreciate over time. And then you exit a position at appropriate times when, it's time to skim a little bit off the top. But you don't sell your Bitcoin. You store it. If you have to use it, there are many other avenues of you having to use it without having to actually part ways with it, right? You could take loans out against your Bitcoin. We've gone over many, many, many times. And there are many companies now here in Canada, in the US, that allow you to get money out without having to actually sell any of your Bitcoin. None of that, right? I'm not selling my Bitcoin. I'm not giving away my Bitcoin. The point is to keep your Bitcoin and hold on to it. I think stable coins is going to be the gateway for a lot of people, because that's what retail is going to use. When you go to your local Starbucks and you want to get your diabetic drink, you pay with stablecoin. When you go get your knickknacks at Amazon, you pay with stablecoin. Retailers, the big banks, Visa, MasterCard, Chase, Wells Fargo, they'll be using stablecoins. That's what's going to get the adoption through. That's going to be the gateway, and then everything else follows. But in terms of like using Bitcoin as a use of payment, it's not going to be me, man. It's going to be through stablecoins. The adoption and the peer-to-peer exchange using a digital currency, it's not going to be with Bitcoin. It's going to be through stablecoin. So I think the Genius Bill getting passed is putting us in a very good direction. It's definitely giving us a lot of tailwind to push us in that direction. What do you think about it, man?
I think I'm largely on the same page as you. I don't think Jack Dorsey is correct saying that if Bitcoin does not become peer-to-peer transactions, it has failed. I think that's flawed, because if you look at the fundamentals of Bitcoin, the actual aspects of the technology make it not good for peer-to-peer exchange. Granted, there are aspects that are fantastic. You can have peerless, trustless transactions. You can send it anywhere, anytime, any place in the world. All that stuff is fantastic. The downside is that the network is slow. Like,
that's the biggest thing. It's very slow. Do you think the Bitcoin network can handle the amount of transactions to the degree that like a Visa can, like the settlement process?
Absolutely
Right. I
not.
mean, look how difficult look at the amount of difficulty that Ethereum is having. Look at the amount of difficulty that Solana is having. You think Bitcoin can handle that level of trans if it became your ideal where the entire world was using it, retail was using it, stores were using it, it's not going to be able to handle it. If you and me were to do it, that's fine. But like millions, hundreds of millions of transactions per day, there's no
Just
way.
the volume, the transactions per second, the time to block finality, all of it is Bitcoin is just not built for that. And I say that because there are other things that are built for that.
Yeah.
There was the a commercial by XRP that came out. Oh gosh, that was almost a year ago at this point. I think they were kind of taking the piss out of everybody, and they said each person tried to transact with their own cryptocurrency of choice, and they all had various downsides. Bitcoin was like he was at the cash register. He hands it to him. He's like, "All right, cool. Can you step aside and wait for 10 minutes? We'll finish this when that comes through." And then there of course was the Solana one. There was like, "Oh, cool, Solana. Yeah, we can take this." Oh, sorry, network's down.
Right, down.
um, as far as the idea of transacting in stable coins, I think that is a lot more friendly of an
Practical?
idea to the normies. Practical as well, for sure. Because obviously crypto is a volatile asset. I imagine it's going to be into the future, but that's not necessarily a downside when it comes to the asset itself. It is a potential downside if you're trying to do transactions, because the quick 1 minute chart swing could actually affect the amount of Bitcoin that you're negotiating or cryptocurrency that you're negotiating for the actual purchase of an asset, especially if it starts to get larger. Then that fluctuation actually gets magnified just by the size of your transaction. So stable coins, obviously, it's stable. It's pegged to something somewhere, whether it's the US dollar or it's algorithmically pegged to one of itself. That is going to give, I think, normies a lot more confidence in transacting with it, because this thing will always be worth the same as it is today into the future in comparison to the currency itself. Obviously, the dollar fluctuates on a daily, minute, second basis, but it doesn't matter to us because the dollar bill in our wallet is still the dollar bill in the wallet. So if you can get that kind of functionality out of your stablecoin, I think that is going to be something that helps onboard people. And like you said, Bitcoin has not failed because it's not peer-to-peer transactions. That's totally fine. We have plenty of other stuff for it. Lord knows we have more cryptocurrencies coming out every day, every hour, every minute. It's wild. But the ones with good fundamentals, good network, good support, and good economics, those are going to be the ones that really get in there. The stablecoin legislation only helps.
Yeah. Can we bring up Centurion's comment here, Z? What do you think about this particular take?
So I don't think he's entirely wrong. So from
I
our
don't disagree
boy
either.
54X, he says government-backed stablecoin just sounds like a CBDC, or central bank digital currency, and the opposite of decentralization and privacy. Privacy from the founding principles of crypto. I think you're entirely correct. From the foundational principles, if you have something like this, it does. It makes you less anonymous, shall we say. There theoretically at some point inevitably would be a government list of trying to tag different wallets to different bank accounts to different people and try to build like individual profiles for people. It's kind of what they always do. Track record shows it. As far as being a true CBDC, it depends on what the controls are. Obviously, I'm very skeptical. I think, like most of you guys out there, that anytime the government is in charge of a thing, they're going to allow themselves more leverage when it comes to the administrative controls. So that is exactly where I think you're correct, where this is more CBDC-like. So if it is a government-backed stablecoin that they have possession of, that they are the ones releasing, and that they control the network, then yeah, that's definitely still a CBDC in pretty much all aspects other than name at that point. So completely agree. But at the same time, I think this is a sector where if the private sector can make their own stable coins that are widely accepted, widely adopted, that's where you get around this. So CBDCs are truly one of the worst things that could possibly happen to the financial system, because they inevitably lead to just tyranny in many different forms. So I completely agree that we gotta fight CBDCs, because the second they actually get instituted or adopted, that's kind of a game over moment. At that point, you live in a post CBDC world, and it's gonna take a lot of effort, a lot of loss, a lot of struggle and hardship to get back that thing that you just lost.
Yeah, I agree. I think it's a really hard, it's a difficult line to tread, to try and balance on, because no matter who issues a CBDC, we've had quote unquote decentralized algorithmic stable coins out there. And I mean, 2022 is a pretty stark reminder of where that can lead. So does that mean I am I am anti stablecoin? No, it just means that the market hasn't figured out the right one currently. There are many trying to compete and put their horse in the CBD no, in the stablecoin race. It's no longer just Tether and Circle and who's the and Maker. It's not just them anymore. There are many players trying to get their horse in that race, but a lot of, I mean, just take a look at Tether and Circle. Those things are also centralized. Right? They don't have a private blockchain like JP Morgan does, but to a degree they are centralized. They can freeze your Tether if they so desired. We know that Tether is working with a lot of world superpowers, and there's no shortage of times where we've seen Tether freeze an account. Now, obviously, a lot of these reports have always been, well, it's a suspected terrorist account or something along those lines. So I'm sure a lot of people are thinking, well, that's kind of reasonable, but it's a tough line to tread, right? Because when you give somebody that kind of ultimate power corrupts. What's the quote?
Absolute power corrupts absolutely.
Absolutely. When you give somebody that kind of power, then like who gets to decide, man? What's the decision-making process? Do they decide on it objectively? Is there a quantifiable decision-making process that all of us have access to and can see X, Y, and Z? Here's how they came to that conclusion. Or did they just, you know what? Bad guy. Freeze. Like Zenith said, what are the controls in place? Is it in a private network or a private blockchain? It's not transparent. Like all of those things have to come into consideration. But it falls within the umbrella of the big picture that we're always talking about, right? When you get mass adoption like this, and stablecoin will be a big part of mass adoption, it is going to centralize to a significant degree. And so, do we just accept it? I don't think that's the good answer either. This is my personal answer, is that, well, a lot of these companies are coming out and creating their own. Let the best man win. If the market really does want something that is completely decentralized, then the number one decentralized stablecoin that will come out, that will have a horse in the race, will win, because people will vote with their dollars. And that's the fairest way to do it. If the world decides once again that they want to move back to centralization, then guess what? It's going to happen. And unfortunately, the best thing that we can do is vote with our dollars and vote with the things that we use. That's the best we can do.
Well said, sir. Well said. All right. Tell you what, let's go ahead. I think it's about that time of the show. Let's go ahead and pull up the charts and see what's going on.
Hell yeah.
I know we prefaced it a little bit earlier saying it was kind of boring. So there you go. There's the spoilers, but we definitely got some points to talk about. So Jay, when you're ready, go ahead and pull those charts up. And while you're doing that, you want to give a shout out, Jemmy, saying happy Monday, DGens. Good to see you as always. Thanks for showing up.
Okay, let me go ahead and share my Bitcoin chart here. Let me know if you see that.
I see it, sir.
Wonderful. So nothing really too crazy going on. I'm going to go over just the 60-day cycles briefly. All right, the highest probability scenario for the Lucas cycles at this current moment in time is that we do have a left translated cycle with a day 13 high, and we're still expecting for price to take the local low of 74,420.69. I'm never going to forget that number. Sometime later on in the cycle, we're going to expect the cycle low to be taken at the earliest, but it is uncommon to have a cycle low as early as day 40. Ideally, sometime after day 45, which brings us to Friday, April 25th, to as late as, if we extrapolate all the way out to day 60, to Saturday, May 10th. So just about the middle of the second week of April. This is still our higher probability scenario, just based on the data that Zenith has backtested and that we have shared yesterday on our flagship DGen Roundtable show. right? The probabilities that you're going to have a 7-day cycle high and that you have an 84-day left translated extended cycle is extremely, extremely low. About as low as you getting a day 2 cycle high, and that was the other alternative scenario that we were considering. And so this is your highest likelihood count right now for the Lucas cycles. Now, it is still my opinion is still going to remain the same, and that if we do actually take out the current day 13 high, then I am very comfortable shifting probabilities to consider this particular cycle as our main cycle count, which is the day 5 high and a left translated 84-day cycle with a day 7 high for our last 60-day cycle.
Jay, real quick, which
Yep.
chart do you have pulled up right now?
I have the Bitcoin.
I see one that has a Bitcoin 1 minute watermark on it, and it has
Oh,
3
goodness.
lines.
Oh my goodness. I am so
My
sorry,
bad.
gang. This is
That's
so
on me.
annoying. So whenever I stream on Telegram, as soon as I switch tabs over, it immediately switches to the tab that I'm covering. What you saw was my CVD chart. That's my degenerate day trading chart.
Attaboy.
Oh my goodness. Okay. I'm going to now share the actual Bitcoin chart, but hopefully my description
There we go.
gave everybody enough of a context. So here we have it. Right, the only thing that would convince me otherwise that we have a 84-day left translated cycle is if we took out the day 13 high here, and then I would be very comfortable in saying that this becomes our primary count. But until that high is taken, your highest probability scenario is still this one. Right? And we still expect a cycle low to come in anywhere between day 45 to day 60, which puts you at around the 3rd week of April to the 2nd week of March. Now, before we go over some Elliott wave analysis here and go over bearish and bullish price predictions for the local structures, I do want to bring your attention once again to the death cross that we just currently had. Right? The death cross is the 50-day moving average, moving below your long-term moving average, which is the 200-day moving average here in yellow. And the thing that I wanted to point out, which is very interesting to me, is that I only made the analysis. I've gone as far back as the last bear market, so 2022. And that here is the observation that I've made. There is a tendency to, when we are getting close to the death cross, right? The 50-day is the blue line, the 200 is the yellow. You can see here that there is, in this particular scenario, we dumped heading into the death cross. Now, what you'll see when we actually go ahead and go back prior times where this occurred, you can see here that it occurred back in August 8th. All right, this is just after post carry trade. You can see that as those moving averages were converging, you can see that we also once again dumped heading into the death cross. And then after which, a few days later in this case, we had a counter trend rally and we get rejected at the 200-day once, twice, 3 times before finally breaking through it to the upside. Now, the observation that I've made is that this is a very common occurrence, at least within this current 4-year cycle. And that there's a tendency for price, once the moving averages start to converge in on each other, there's a tendency for price to dump to the downside. We get a counter trend rally, get rejected a few times at the 200-day moving average, and then in a bull market sense, we make several higher lows. Let's go a little bit further back. And to the other time when the death cross happened. You can see it here, right? As the moving averages started to converge in on each other, there's a tendency for price to dump. And then once the cross happens, there's a counter trend rally. In this particular scenario, it only got rejected once, bounced, made a higher low before eventually breaking through. Let's go back a little bit further. This time, during the 2022 bear market. Now, here is where a distinction occurs. In the bear market, when the moving averages converged in on each other, this was sometime in January of 2022, right? Same story. Price dumped heading into the death cross. But take a look at what happened after the counter trend rally. We get rejected once at the 200, but instead of making a higher low, we make a lower low. And then you get the rest of the bear market, which spends the entire time underneath the 200-day moving average. And so I think, if I haven't back tested the data yet, I think that's a very common occurrence that you're going to see whenever you get this kind of cross happening. In bull markets, price will dump into, leading up into the death cross when those moving averages start to converge. And then there's a counter trend rally that gets rejected at the 200-day moving average, gets rejected there maybe once or twice, before finally breaking through at the next attempt. The key point to take home there is that the rejection makes a higher low in bull markets. In bear markets, it makes a lower low. Again, I'll confirm once I back test the data during the week, and then I'll update you with what I find. And so if we can take history into consideration, then when we finally, you see how we dump into the death cross, and now we're flirting once again with the 200-day moving average with that counter trend rally. TA is a lot of pattern recognition. So if I were to take a stab at things, we get rejected at the 200-day at least once, and with any luck, unless the tariff things just completely destroy us, that the rejection after the counter trend rally will make a higher low. So I am very hopeful that if history did repeat itself, we do make a higher low and we get a trend continuation to the upside, which means we get that very unlikely 7-day high with an 84-day cycle, right? But again, it seems like that's been the trend for this bull market. I don't know if the trend is going to hold, right? I literally only have 3 data points for this current 4-year cycle. So the part of me that's bullish and that's hopeful hopes that we make a higher low and then break through to the upside. But maybe this time is different. Any thoughts on this, Z? I don't know if you've observed this too, but again, this is only something that I've seen in this current 4-year cycle because I only went back as far as the 2022 bear market. But what are your thoughts on this?
I will admit this is the first, today is the first time that you and I have talked about this one. However, at a glance, it makes complete sense, especially if you're going from the pattern recognition kind of thing. The ability for a market to make higher lows is a great indicator that it is very bullish and wants to move to higher levels upwards. When you have the opposite happening where you can't hold those support levels, that is an indication of weakness in the market, and it's going to shift you to lower levels. This is both for traditional markets like S&P 500 charting, individual stocks, and also for the crypto market. So part of this theory that I've studied previously is called box theory, which operates a lot along the same principles, which talks about the idea that you want to, when you're looking for a breakout in either direction, you're looking for confirmation of that trend by making those higher lows or those lower highs. In our case here, for being in the bull market and using this also in conjunction with our overall 4-year cycle theory, which we believe the bull market is still very much in effect. This is just normal fluctuation or a normal correction for the crypto market. I think that it makes perfect sense to me. So something like this, I believe it. I think we need to backtest it a little more, but I do think this is an interesting novel theory that we're coming up with here. The odd part for us, though, is that it does somewhat fly against our 60-day cycle.
That's what I wanted to get your thoughts on, right?
The predominant trends of the 60-day cycle.
And then the breakout, it's like, wow, that's like one data point out of many. We have a left translated day 7 high 84-day cycle. It'd be the very first one.
Correct. Yeah. So for the folks at home, one of the things that I do with 60-day cycles is I try to use normal distributions, aka bell curves and standard deviations, to create confidence percentages based on how long or short a cycle is, and then also what the probability of getting a high so far in one direction is. Right now, if Jay's theory here about the higher lows going towards a breakout of the 200-day moving average, then that would mean that what we're going to end up with as the print of our 60-day cycle is actually a very, very extended 84-day cycle, which is beyond 2 standard deviations.
Yeah.
At that point, we're talking about less than like 2.5% of all cycles past like day 78, getting down out to day 84. That tip of the bell curve gets even smaller. Yeah. And on top of that, the other conflicting point there is that traditionally, whenever we have a cycle high that is earlier than day 30 in a cycle, it usually means it's going to be a shorter cycle. So a day 7 high is a very short high for a 60-day cycle, which really boggles the mind as to why we'd get an 84-day cycle out of it.
Yeah.
So again, these are all, when it comes to TA, Jay and I and anyone else you talk to, we're not going to look at one single factor. We're going to look at a myriad of factors that we believe work for our analysis and the strategies that we build. So that's what we're looking at here. If you want to use 60-day cycles, totally fine. If you don't want to, also totally fine as well.
Totally fine.
It just matters what you care about, and Jay and I care about these ones.
Yep, exactly. Well, they tend to make because it's how me and Z understand the markets, right? It makes the markets make sense to us, whether it's actually true or not, or just pure coincidence. Well, I don't know who can answer that question, but we found what works for us, and we're sharing it with you. And it's up to you, the individual, to find those indicators and tools that work for you. So, before I move on to the local timeframes here, I did want to point out that the 200 is currently sitting at 87,550. So that's a very interesting number to me, because obviously the 200-day is one of our major, usually support for bull markets. Now it's serving as resistance. So that's a very interesting point of resistance for me, because when we go out here to the local timeframes, the probabilities have shifted. So that wasn't completely boring. The probabilities have shifted slightly in favor of the bulls to take the high at least one more time before a larger move to the downside. The reason being, if you guys remember from yesterday, I had us pegged for a completed diagonal structure already. However, on the local timeframes, right, you could see that when we made this lunge up here, guess what fib that took out? If you take a fib retracement from high to low, we took out the 886 Fibonacci at 85,741. The high there was 85,818. So we have an 886 touch, which means on a balance of probabilities, you are going to take the local high at least one more time before a potential rejection to the downside, correction, and then continuation. So we had to move our diagonal structures just slightly over to the right, still a diagonal still perfectly well within the rules of a diagonal. And so we're expecting one more high before our correction. This is now your higher probability bullish scenario, which is nice because we get one more high, which means any downside action is going to be hopefully somewhat muted because we are coming from a higher high. So in terms of resistance, the reason why I found that the 200-day moving average very interesting is because if we actually turn on our major areas of horizontal resistance, where are my points of controls? Did I delete? Here we go. You could see that the next major area of horizontal resistance for Bitcoin is the naked daily point of control at 86,341. Right. And then also, if we take a fib extension comparing the magnitude of 3 to 5, you can see that the very common targets for wave 5 sits anywhere between the 0.5 Fibonacci to the 0.786. So 786 is a rarer target. So more commonly, you're extending to the 0.5 and the 0.618. You have the daily naked point of control at 86.3. You have two major fibs sitting just slightly above there. And the 618 is just sitting above the 200-day moving average. The 618 is at 87.7. Your 200-day moving average sitting at 87.5. So really, for your wave 5, you're sitting at a very nice area of resistance because you have basically four major, you have you have one major horizontal, you have a major moving average, and you have the major fibs. So if we are going to make another lunge to the upside, then I am willing to bet money that this is where we are going to get rejected. All right, so this is your highest probability bullish scenario at the current moment in time before eventually a correction to the downside. And in terms of your bearish scenarios, again, like I mentioned yesterday, Elliott wave gives you a directional bias, right? This could either be a diagonal, or on the bearish side, we have a WXY double zigzag. Your targets remain exactly the same. The zigzag might be a bit more extended, but it just doesn't change the fact that your first areas of major horizontal resistance is the daily naked point of control, and then obviously the 200-day moving average as well. Right? So the directional bias does not change whether we're looking at the highest probability bearish or the highest probability bullish scenario locally. The only big difference is that on your bearish scenario, you're going to get a much more steep and aggressive move to the downside, and eventually we're looking to take out the low of W here at 74,420.69 for the left translated cycle, which would make me and Z very happy because it's not going to be way beyond the norms. Okay, so that's basically it that I wanted to cover on the local structures right now. Highest probability scenarios to take the current high because of an 886 touch. I give you your target boxes for resistance. And then on the way back down, we observe the local structures to determine are we more bullish or bearish when that time comes. But right now, our directional bias is at least one more move to the upside before a bigger move down.
Excellent. Well said, sir. The only 2 cents I'm going to add here is looking at the moving averages, specifically the 20 and the 50 day. So if we zoom in a little bit on our daily chart here, you'll notice that we've actually stayed above the 20-day moving average for 3 days now. And in my opinion, that is an indicator of some short-term bullishness, which actually fits very nicely with what Jay is saying there, because we took out that 886 level for the Fibonacci on the way towards the upside, which means the possibility of getting a little more to the upside actually makes sense. Also, if we take into consideration the 50-day moving average, we haven't quite really surpassed that one, in my personal opinion, because we've largely been bouncing around it, and it almost looks like it could be it could possibly be the start of a little sideways consolidation. So I think that the time under the 200-day moving average, we got a little more time there. As far as our lower time frame moving averages, I think that we're actually starting to make some good moves towards getting towards the upside. But at the same time, though, when it comes to the 60-day cycle theory, which I use that very heavily in the technical analysis that I do still believe that there is a very high probability that we will see Bitcoin back into the low 70s at some point, even if it's just momentarily.
Yeah, I think if just a wick below there, if we use the 50, is it the 50-week moving average, Z? It's the long-term bull market support.
It is.
Yeah. As long as we wick below there, it's fine. Once you start closing consecutive weeks below there, that's when it starts getting really concerning.
Correct. So for reference, this orange line here, this is our 50-week moving average. We've switched over to the weekly chart. We had a small wick below it last week, but what you might notice is that we never actually closed below it during a bull market. We've touched it once, twice here during this bull market, and in the previous one, between our double top, we had a quick double touch there, aside from the COVID dip. And then there was also one time we stayed a little bit below it, but very much flirted with it the entire time. And this is also in the very early stages of the bull market. So 50-week moving average is another one that we're going to be watching out for, just so that we can understand what the implications are for the 4-year cycle. Because in my personal opinion, if you want to actually start listening to all the people on crypto Twitter saying that the 4-year cycle is broken, the bull market is here, it's all over, sell everything, that would be the first inkling of possibilities for me to start believing those guys.
Yeah.
Till that happens, though, 4-year cycle is still very much in effect. I'm going to believe that the trend is going to continue to hold until I get confirmation that it is broken. We got plenty of time left in the rest of the year. So anything can happen either direction. I personally happen to believe it's going to happen towards the upside direction, but I think that's me.
Yeah. Well, even structurally speaking, right? Structurally speaking, as an Elliott wave analyst, there's way more. The move to the downside has much more overlap and is more corrective in nature than it is impulsive. So that's where I currently stand. So, and even just as that Elliott wave bias, I'm leaning towards at least another high into around the 130, $150,000 area. In terms of the 50 week, you could even argue that when you go back to the last cycle, if COVID didn't happen, there's no way we would have closed the week below it, because every single
Agreed.
time within that 4-year cycle during the bull market, a touch and a bounce off of support never closed below it. So you take COVID out of the equation, and I think you would have had an even more aggressive move to the upside.
I
Right?
think that makes perfect sense to me. I will say, I think I remember back when we were in January and we were sitting over 100K for a couple weeks at a time there. We were all, I personally at least was thinking about my like total 4-year cycle targets. I was like, okay, 126 looks very, very doable. 152, 154 looks even very doable as well. But now that we've had a bit of a pullback, those numbers kind of come back into a little more realistic picture that we had back during the summer of 2024 when we were chopping around between 73,000 and 55,000. I think we even touched all the way down below 50 at some point there one time. So it's very easy to, in the moment, get caught up and think about your future price targets and the overall theory about it and how probable it looks. But the market can change. I mean, we've seen it go down for effectively the past 3 months at this point, and that has been one of those things that has helped recorrect some of the previously held notions that we've had. But at the same time, I think overall, a lot of the larger macro cycle targets that we've talked about in the past, they all seem still very much reasonable, just as they were when we talked about them like a year or even 2 years ago.
Yeah.
So it goes back to, you just got to take things with a grain of salt, and your current time frame is absolutely going to color the picture of the future that you're seeing. So right now, 84K Bitcoin, yeah, 126 seems very reasonable. 150 is a little bit closer to there. Like that might be like the top.
Yep.
But
yeah.
Even for those folks, though, the 241,000K Bitcoin believers, there's still a case for it. Yep. I think that it's a rather aggressive case personally, but that being said, there is still a case.
Yep. I would have to agree wholeheartedly. You guys have heard me several times here before. We take it level by level. So the next level to look out for first is taking out the $108,000 high. I think after that, the next reasonable target is, like Z said, anywhere between 120, 125,000, and then we'll reevaluate from there. What does market structure look like, right? What does the volume look like? Did it take out the volume highs of wave one? Because currently, if you're looking for a wave three, highest amount of volume still occurred way back in 2023, which is uncharacteristic of where you expect the majority amount of volume to occur during a bull market. So there's still a lot of factors that we have to consider here that have not yet occurred, right? So we could have the most volume come in during a wave five. Who knows? We don't know what's going to happen. Remember, crypto, the most parabolic moves in crypto has always occurred in periods of time where monetary policy was friendly with risk assets, right? Either very friendly, or you're in a state of QE. We don't know yet. We are still higher for longer, slower for longer. Right? The Fed hasn't stopped QT. We barely have any cuts priced in this year, and those aren't even priced in. They're just estimates by the Fed. Who knows? They might change their mind like they did last year. And so, what happens when you get no more QT? You stop the runoff. What happens when you start rate cuts? And then what happens when inevitably the Fed is going to be like, we got to absorb some of that incoming supply from the bond market because it's crashing, and we have to start injecting liquidity back into it. QE. We don't know. Who knows? 4-year cycle might break. We might go parabolic in 2026. So a lot of variables to consider. And so you take it level by level, man. Don't make any assumptions based on, like, you could have a model based on prior cycles, but don't assume that anything's going to happen just because it happened in the last 3-4 year cycles, man. You're gonna get caught bag holding that way. That's not good risk management. So, like, don't believe what people in crypto Twitter are telling you, right? Take everything, like Z said, with a grain of salt. You have to come up with your own trading strategy. Do not. What's that quote? What's that quote? If you're not the hero in your own story, you're a 2-bit player in somebody else's.
That's a good one.
Don't be a 2-bit player in somebody else's trading strategy, gang. Okay.
Definitely. And I think developing your own strategy and based on your own risk profile, who you are as a person, what you look at, what you care about, that stuff's very important. We covered it 2 weeks ago on Book Club over on DJ and Roundtable, the book Market Wizards. It was a guy that interviewed a bunch of people in the 70s, 80s, and 90s that were successful stock traders. And there were a few principles that they found across all of them. One of them was risk management is number one name of the game. And the second point was that there's no silver bullet. There's no single other factor that really all these guys had shared across the board. There were some guys that were very technical analysis focused, and there were some guys that were very fundamental analysis focused. There were the mix of the two, but there were also these cases of people who did not even touch the other side of that coin. And they were still highly successful in what they did because they built a strategy that worked for them based on their strengths by leaning into it and understanding good risk management and having the ability to remove your emotions from it. So being able to take yourself out of the equation is going to be very, very helpful. It's like the classic IT joke of people saying that, oh, this help ticket, the error is in the chair. Turn it off, turn it on again. You'll be all right.
Oh God, that's the first step.
Exactly. I will say though, level by level is another very good, very important term used there. The big macro level we're looking at is getting back to all-time highs, but even the step before that, in my personal opinion, is we've got to recover that $91,500 range. That's step one, level by level, folks.
At least first, let's get back above the 200-day, man. Like we got to get above the 200-day, guys. The more time we spend closing below that, man, the weaker the market gets. So
true. Alrighty, we do have one final friend of ours showing up for the stream. Mr. Moonpill, the Rational Optics. He says, "What's up, gentlemen?" Raising a nice whiskey glass there. Well, it's a weekday for me, so you get a La Croix. Sorry, boss.
Got an empty glass.
There you go. There you go. Stay hydrated, folks. People keep telling me that coffee isn't hydration, but like there's a lot of water in there. I know because I put it in the coffee machine every morning. Yeah. I know how much water's in there.
It's mostly water.
All right. True. Jay, what do you got going on? Where can folks find you?
As far as what I've got going on this week, we have a Monday open market stream tomorrow at 7:45 a.m. over at the Telegram, the DJ Roundtable Telegram chat. And then I believe we have a Whiskey Wednesday on Wednesday evening, 8 p.m. Eastern time. So that's what we've got going on within the near future, 48 hours or so. Aside from that, you could find me on Instagram at agent_J Schroth, on X at _P90hex. But most of the time I spent and most of the content that I produce, you can find that on Telegram. That's where you can get a hold of me. I am there. My phone is basically attached to my hip because I conduct all of my business on this little tiny device. So if you want to get a hold of me, tag me on Telegram. That's where you'll find me. So as always, thank you, ladies and gentlemen, for those of you joining us here on the live stream and for those of you who are going to be joining us on the replay, gang. Thank you for joining us on this wonderful Monday evening. We know that time is your most valuable asset, so we do appreciate that you spend some of that time here with us. Until next time, Z, take us out.
Folks, you can find me over on Twitter and Instagram at ZenithDI. You can also follow the Walk the Block pages over at Walk the Block NDF. That is the handle on Instagram and Twitter. Stay up to date over there with all the latest updates on the shows coming out, what we're talking about. And if you have any questions, you can always hit us up on there or our personals. Outside of that, though, folks, enjoy the boring market day in the sea of turmoil. It may appear that we're navigating through the hurricane and we may have hit the eye of the storm, and it's nice for now. But volatility is still high. A lot of questions are very unanswered, and we're going to have to see what we get. But until then, everyone stay safe out there as we continue to navigate digital finance together. Good night.